My background before coming into Bespoke Financial is really, it's a very traditionally focused on the finance road. I grew up in New York, went to college out there, and after school ended up joining Goldman Sachs for a couple of years, and then ultimately moved on to Guggenheim Partners Investment Management. And throughout the entirety of my finance career, I was always focused on fixed income debt markets, and towards the later part, really focused on the structured credit and middle market lending space, dealing with really non-vanilla industries and assets, and understanding how to structure deals so that we were protected as a lender, but also earning an outsized yield. And so that was, I'd say, where I spent the majority of my focus over my 10-year finance career. I'd say in 2013, the first step was my moving and relocating to Los Angeles, still working in finance. But from a vantage point, it gave me really good look through into seeing this industry really growing from the ground up. And, as an outside observer, my own personal belief, because I believed in cannabis as a product, I believed in the good it could do to the society in general. I understood that it would ultimately grow to resemble any other consumer product industry. And so in order for that to happen, debt financing would have to be available to this industry. That's how all other industries sort of manage their production. And so what I saw was a compelling industry because I believed in the product, a compelling growth story because it was starting at the ground level, and a very defined and very obvious need that has just gotten more and more pronounced year over year. And so that was sort of all three factors combined to present a really compelling opportunity, I thought. And, it just seemed very exciting for me at that level, where I was professionally, to really move into an industry and really help begin building a whole industry that was servicing the cannabis space. Bespoke, where it is today, is a licensed commercial lender that provides non-dilutive debt financing for cannabis companies across the entire supply chain. Now, the initial impetus for starting the company, as I was looking at the cannabis space and understanding this need for debt financing, I approached it more from the angle of building a very traditional financial firm that was just offering term debt financing. Ultimately, I ended up connecting with you and other folks at Casa Verde, who introduced me to my other two co-founders, Ben and Pablo, who also co-founded ProducePay. Now, ProducePay is a fintech platform that provides debt financing to the perishable produce industry, and they've done a tremendous job scaling that business over the past 5 years, having provided over $2 billion worth of financing since inception and raising over $30 million in equity financing. Ben and Pablo, based off of the success they had at ProducePay, were looking to see what other industries they could take lessons learned and really recreate the success of ProducePay, and cannabis jumped out as an obvious candidate. And so ultimately, after speaking with them, we launched Bespoke in July of 2018 with the focus of really replicating the success of ProducePay as a fintech platform, but also incorporating the traditional financial concepts in terms of underwriting and risk management and valuing the assets and opportunity within the industry. And so the ultimate company that launched, I think, was a good hybrid of the two. And now we are a licensed lender servicing the industry, but also have the incorporated fintech angle that allows us to scale very quickly and service a large percentage of the market. Sure. Yeah. So I'd say, the first year of the company's existence was really spent addressing a lot of the hurdles that are keeping other lenders and capital providers from the industry. So the initial year was really spent in terms of repurposing a lot of the underwriting and risk management practices from ProducePay, getting our lenders licensed, raising our credit facility in order to have capital to originate these loans, and defining our first financing product. We ended up onboarding our first client in June of 2019, so about a year later, and we've just had tremendous growth ever since. So as of today, a full year later, June 2020, our client base has grown from 1 to 18 clients that are actively accessing financing on our platform. We've reviewed to date well over 200 different licensed operators in the markets that we're open in. I'd say we also grew in terms of geographic coverage. When we initially launched, we only focused on the California recreational market, and over the past year, we've now expanded into 3 other states and would look to add on more in time. And we've also expanded our financing product offering. We initially launched with one financing product, invoice financing, and over time have now added 3 additional financing products that help companies manage their working capital needs, inventory financing needs, and also now we offer a general line of credit, which is a very flexible form of financing. So, in terms of clients, products, services, geographical areas, we've grown tremendously in all those areas. And also in terms of the team, we now have 8 full-time employees on a day-to-day basis, and that's not including advisors that we have and board members. And so, the growth in the company has been very pronounced, I'd say, in all aspects. Sure. So that's a huge point of focus for us when we're approving any new customer onto our platform. As a licensed lender, Bespoke is secured against all the corporate assets of the borrowing company. And so when we do our initial underwriting and approval, we ensure that whatever amount of credit we're willing to extend to these companies is over collateralized when compared to the assets of the borrowers. And these assets include not just their deposit accounts and inventory and AR, but it also includes their cannabis inventory and their cannabis licenses, where a lot of the value exists for these companies. So from the gate, what we ensure is that our exposure to a company is always more than covered for by the assets of that company by itself. Beyond that, what we track on a monthly basis is ongoing surveillance. So this financial analysis is done on a monthly basis to ensure that the companies themselves are either maintaining or improving their credit quality. And if we start seeing degradation in the client's health, or financial health, I should say, what we can do is restrict further advances, reduce our existing exposure, and recover our proceeds before there actually is a default or a much more serious event for these borrowers. And then if there is a default, if a company, is unable to make payments when due, again, we rely on our security interests in the assets of the company itself. So we are able to go then and, recover our proceeds through a liquidation of assets, whether it's inventory, whether it's collecting their AR, or ultimately facilitating the sale of their cannabis license itself. Yeah, that's a great question. And I'd say in general, overwhelmingly positive. And I think it helps to look at not just the macro environment for financial markets, but also the micro environment within the cannabis industry itself. So from a macro level, obviously, there's a lot of volatility. A lot of debt markets have repriced at wider spreads. At the same time, we're seeing interest rates cut to zero. So as an investor, you're really torn between reaching for safe haven investments that offer virtually no return going forward, or reaching for high yielding opportunities that have just, where the risk is getting repriced on a regular basis. So in order to get into the double digits return context, you're having to reach for very distressed situations or workout situations that will take time. Compare that to sort of the opportunity we're offering to debt investors within the cannabis space, where you're starting off with an industry with very strong forecasted growth rates. You're dealing with a very stable consumer base, as evidenced by the consistent sales on a year-over-year basis. And at the same time, pairing that with a high yielding opportunity, because cannabis being federally illegal offers a very high risk adjusted return for lending to these companies. And so from an investor standpoint, they basically see the opportunity to lend in a very secured environment, collateralized by assets, secured by businesses that are screened through our underwriting, and at the same time earn these really outsized yields that really are not available in any other industry within the space. And so the feedback has been very positive, and that's allowed us to increase our own debt facility over 3x over the past year, and continue to have good confidence that as our business scales and our client base grows, we'll have the capital in hand in order to sustain that growth and fund these loans going forward. Yeah, I think the real exciting component of Bespoke isn't just, the lending and the day-to-day operations, even though that does by itself represent a tremendous opportunity, whether we go into new states or develop new financing products, all of those are expanding on what we do on a day-to-day basis today. But the real exciting component, I think, is, looking towards the future is the data that we've already started aggregating and analyzing opens up a lot of avenues for Bespoke, right? So in terms of our interaction with our clients, we get really good look through not only into our clients' activities, but also the activities of all the companies they interact with, whether it's vendors or customers. So by aggregating that data, we're going to be in a position to offer services like the first third-party credit bureau for the industry, where an outside observer now has more transparency into the industry because he can understand whether the company he's looking to interact with has a good track record in terms of paying their bills and credit performance and how they've interacted with their own partners within the industry itself. So that data component, I think, is going to be very key. That's going to allow us to build this third-party service that should be attractive, not just to people within the industry, but also people outside the industry, ancillary service providers. Beyond that, our vantage point in terms of sitting in between our clients and how they interact with their suppliers or customers opens up avenues in terms of offering a payment processing platform, some way that these companies can really manage paying their vendors and also collecting from their customers. Because keep in mind, the cost of doing business in this industry is still very high. And so by leveraging our integral standpoint within the operations of these companies, we can start offering efficiencies and platforms that sort of make their lives easier in terms of tracking payments, tracking collections, tracking orders. And so building off of that vantage point, I think, is going to be key in terms of propelling Bespoke to being more than just a debt financing lender servicing the industry.